Another week, another midweek market watch. Join me as I take a step back and look at what's been going on in the world of real estate and mortgages. The prospect of returning to normal has sparked all kinds of enthusiasm, which translated into higher than expected returns from the stock market, as well as the housing market index, whose score rose 7 points this month for a reading of 37. Now, this is still below the neutral mark of 50, but the trajectory is promising. What's more, mortgage applications have been on the rise for the fourth week straight, and interest rates have plummeted yet again, inviting big opportunities. What does this mean for our near future? Here's what I think. This is going to be a hot market for both home sellers and real estate investors who are able to look at the long term. Right now, things are still fairly uncertain, so home buyers and sellers alike are still treading lightly. And while rates have been low for quite some time now, people with less than perfect records have not had an easy go of it. However, investors are just the people with portfolios strong enough to qualify for historic rates, and the ones who are able and willing to move fast may get the best of the spoils. Because of the lockdowns from the pandemic, house starts fell by 30.2% in April, which is the largest drop that we've seen in 5 years. It doesn't help that we've already had a housing shortage in the order of many hundreds of thousands of homes and counting before all of this hit. This means that more and more people are going to be contending for fewer homes, which of course drives up prices. Homebuyers who are able to mobilize quickly may be able to avoid the peak prices. Conversely, sellers who hold out for just a bit longer may be in for some impressive gains. Unfortunately, for the average American, the journey to homeownership may continue to be an uphill one for a little bit longer. Unemployment reached 36 million people last week. Many small businesses may be forced to shut down, and with forbearances still a real risk, now hitting 8.16%, lenders may still not be eager to lend an average candidate. As these things often go, the people who are hardest hit are often not the ones that are able to benefit the most from the opportunities created. If you're a homeowner who's not sure about your situation, I have some words of advice. Get in touch with your mortgage servicer, their name should be listed on your statement, and ask them to walk you through your options. It may help you develop a plan of action that best meets your needs, whether that involves forbearance, relief refinance, a repayment plan, modification of terms, or reinstatement. And of course, if you just want to explore your financing options or find out what you're eligible for, please get in touch with me. I can pre-qualify you right over the phone in minutes at no cost or risk to you. I'm Chris Cornish, and this has been your Midweek Market Watch. Please sign up for a weekly report for more insights, and I'll see you next week.